Welcome to this Killick Explains Finance video. This week is all about two words that people use all the time in investing, even if they don't know they're doing it sometimes, it's kind of subliminal, but shouldn't. Those words are what if. Okay, so the background is what here? What investors need to be rational and logical, and asking the question what if actually isn't. Two, we need to be forwards, not backwards looking, and as soon as you say what if, then you are looking back, and that's not helpful, and as such, hindsight bias, to give it its technical term, is dangerous. I'm going to use an example to show what I mean, a very well-known example. So, hindsight bias, how does that work? It's over-reliance on the past as a guide to the future. It's very tempting to do this. I mean, there are risk warnings that say the past is not guaranteed in the future, but people do it. They anchor to things that have happened, hoping they'll happen again. And it can be dangerous. It's also known, has lots of names, as rear-view mirror investing. And Amazon is a classic example. What if I'd bought Amazon when it listed? What if I'd bought Amazon 5 years ago? And so on. Now, this is a good case study. So Amazon has been undoubtedly a spectacularly successful stock. There is the stock chart. You can't argue with the way this line just sweeps up like that, with the incline getting steeper and steeper and steeper the further out you go. And people say, oh crikey, if I'd bought it back here or back here, where would I be now? Or what if? Very dangerous. And that's because it can encourage people to take other risks, having missed the boat on something like Amazon. But let's look at why people do miss the boat and why they shouldn't ask the question, what if? Now basically it's a classic what if stock. People think, had I bought at the IPO? There are lots of stats you can quote on Amazon. I would have made 1,400 times my original investment. Crikey, it's the one you get in the pub all the time. Can you imagine if you'd put £10 into Amazon when it IPO'd? And so on. And there is a big but coming up. What people tend to forget when they say that after a drink or two is that during the first 21 quarters, the cumulative income loss on Amazon was nearly 3 billion. And people are selective about their facts. They say, what if I got in well after all this muddy stuff? Obviously, I would have avoided that. Well, would you? If you got right in the beginning, you had to really hang on to a pretty hairy stock to make subsequent gains. And loads of people wouldn't have done or didn't. And that's the point. So by saying what if, they're saying, what if I bought Amazon and got my timing exactly right? And that's quite a big ask. So the share price dropped 95%. Bet you didn't know that, between 1999 and 2001. So would you have still been in there after a 95% loss, or would you have panic sold? Or not even panic sold, just sold. And volatility has often been well above average. So to hang on to a fairly hairy ride in the early days in particular, you had to be prepared to buy a stock which suffered much bigger price swings on a daily or weekly basis than most other stocks around it. And basically the price to sales ratio, just to give you an idea, peaked at 40. So people who say I'm a value buyer, would you have bought a stock at a price to sale ratio of 40? Now it's 3.5 today or something like that, so it's come down a lot. But hindsight is a wonderful thing. You had to be prepared to get in, suffer a loss, buy at a high price to book ratio, and so on. So the dangers basically are what? Investors tend to look for the next Amazon. They say, right, well, I missed that boat, so I'm going to hunt around for the next golden ticket, the next Amazon. And they look at the so-called unicorn stocks that I've covered in another video and say, well, one of these could be an Amazon. But actually, they say that without really understanding what they're talking about. No disrespect intended. Because a lot of people still don't understand Amazon. Amazon's not an internet stock. The website's all right, does a job, it's a logistics stock. And that's what their USP was. Took a long time for people to work that out. All right. And basically, Amazon has a lot of unique features to it which make it quite difficult to replicate. It's not to say it will never be replicated, but it occupied a particular space in a particular market and disrupted it in a particular way. And saying, well, if I just start hoovering up Ubers and Airbnbs and Zooms and so on, I'll get another Amazon. Well, they're nothing like Amazon other than they're trying to disrupt their space. All right, and people forget how determined early investors had to be. So anyone sitting on a 1,400 times their original investment gain, lucky you, but boy, did you have to hang on in there, and a lot of investors don't. So other examples of hindsight bias. And Amazon is a classic what-if stock. It's dangerous as such, in a way. I won't go back and sell until I get back to break even. So people say, I'm hanging on to this stock, and until I get back to break even. Well, what does that mean? What is that break even price? Is that realistic? Have things changed? Could you be waiting 20 years to get back to break even, stubbornly saying, I'm not going to sell for a loss even if the facts have changed and I might have made a mistake. Many of my friends have made massive gains in the so-called FANG stocks, the Facebooks, Amazons, Netflix and so on. So yes, great, well good for them, but they probably bought quite a lot earlier than you're about to. And once again, are you buying something where the story still stacks up? I'm not saying it doesn't. I'm not saying don't buy. Momentum's a powerful thing, but don't just buy because you've heard everyone else is doing it. And any sentence that begins what if is dangerous. We can all do that. What if I'd owned a Porsche when I was 25? I didn't, by the way. Well, that would have been happy days back then, but what's that got to do with right now? So I'll finish with a Dave Allen joke, which I don't do too often and I won't do too often again, but it is relevant here. So a lost walker comes across an old Irish shepherd. Excuse me, but how do I get to Cork, is the question. It's easy enough, says the shepherd. Great, can you give me directions from here? Reply, that's trickier, because I wouldn't start from here. And the point about being an investor is you do start from here. You can't start from where you wish you'd been 10 years ago. That's the hindsight bias, that's the what if. You start from here. So you need to assess the wisdom of setting off on a particular route as an investor right now. To find out more, usual spot, and to watch videos related to this topic, killick.com/learn, or pop onto YouTube and it's Killick & Co.